Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 28th, 2017. So again, this week we saw all indices move to fresh all-time highs, and this is obviously very bullish. Biotech and solar continue to lead. Junk bonds are confirming new highs for stocks, but I think the investment-grade bonds may not be done correcting. US dollar is approaching a very important support zone, while euro is breaking to fresh multi-year highs. Gold is of course taking advantage of this, and gold miners are also having a good week. Oil is definitely overbought, and I will look at XLE. I don't think it's confirming a move in oil, and natural gas again goes nowhere this week. So S&P 500 ETF SPY on a daily time frame. These are fresh all-time highs here on Thursday. Relatively large candlestick, but so far what I've been seeing is that we make fresh highs, we pull back, and then we just make fresh highs again. So I don't see a major tapping pattern. Additionally, the advanced decline lines are also at fresh all-time highs, so I don't see any major divergences either. Yeah, this is a weekly time frame here, and you can see the S&P is kind of formed this doji candlestick. That does not mean we're going to collapse from here. We could pull back something like that. That would usually mean a buying opportunity, though. QQQ, the Nasdaq 100, same thing. On Thursday made fresh high. Notice this really big move here from the lows from early July. Also, I pointed out this very large volume here before when this volume occurred in June, and I said that most likely the QQQ has already bottomed. We more or less bottomed out in that area and made a fresh high from here. Once again, I repeatedly urge new subscribers, at MasterCharts Trading, and also new traders, and also some experienced traders as well. They can, people make the same mistake, and that mistake is trying to find a top in a clearly bullish instrument. And QQQ, S&P, pretty much all major sectors right now are bullish. This is not a short, this is not a chart to be shorted. If you want to look for charts to be shorted, you could go to here, for example, go to free charts, go to SCTR reports, and you go for US ETF, for example, and you do, the opposite. Look for SCTR of 0 or less. So, for example, I don't know, here's XES. And XES is obviously this is a 52-week low. So yeah, look for shorting opportunities in weak stocks, not strong stocks. So QQQ is not a weak stock, obviously, and we want to be going long. We want to look for bottoming patterns, not topping patterns. IWM, same thing, fresh all-time highs, now a pullback. Now this is a more choppy chart, and you can see it jumps around quite a bit. So if you like that kind of thing, IWM is for you. But in general, I still think that this is a bullish chart. Notice the advanced decline lines are also confirming it as a bullish posture. Dow Jones Industrial Average, the strongest of the major indices. Notice that it is at fresh all-time highs on Friday, while S&P actually pulled back on Friday. So there's a preference for I guess blue chips right now. But overall, fresh highs and advanced decline lines are confirming the move higher. Financials also moving higher. Good, strong-looking chart. These are multi-year highs, so nothing wrong with this chart actually. If we get a pullback, I would be looking to buy it, not to short it. Last week I pointed out that advanced decline lines for XLY, the consumer discretionary, also hit fresh all-time highs before the actual index made a record high. Notice that this week we made a record high, so this was a nice bullish divergence. And this is sometimes they work out, sometimes they don't, but I'm more inclined to believe bullish divergences than bearish divergences in a bull market. Industrials a bit under pressure, and I think this has to do with transportation, because transportation had a great fall on Thursday here, big drop. Additionally, it's relatively weak sector. Notice that the technical rank is only at 6.5. So there are other stronger sectors out there. We do trade XLI and we do trade the IYT at MasterCharts Trading. So we make lots of choices. But as of late, things have been moving. Stocks have been moving strongly higher. So there is just not as many trades. So we're just sitting in our positions and waiting for the dividends and waiting for appreciation to move in, to come in basically. Financials, rather, I'm sorry, this is healthcare, also one of the strongest sectors, and it's powered by biotech. By the way, here's biotech. Biotech 52-week highs, XLV, healthcare also 52-week highs, but last week. So both sectors very strong. Biotech particularly strong. Notice that the technical rank is above 90, 96. So very, good looking chart again. And again, we do trade at MasterCharts Trading, so we do look for buying opportunities. This is a clearly bullish market, so we're not looking to short. XLP, big candle here, and I think it probably had to do with Altria reporting. Very large move here, very large amplitude candle. But overall, this is a bullish chart still, and I would again not short it. I mean, these are all-time highs, so how bad can things be if these are all-time highs? Utilities, same thing, very similar to XLP, big drop, and now we're rising again to fresh all-time highs. So, this is a nice chart that also, pays dividends as well. This fund also pays dividends. So I would definitely look for buying opportunities. Finally, here's solar, and this is one of the speculative plays. I kept pointing this one out that, I think we have bottomed. When I look for stocks have, stopped falling, I need to find a lot of data points to prove my point. So, for example, here's one data point. The 50-day moving average is now above the 200-day moving average. If I look at a weekly channel, 52-week channel, these are all-time lows. So it will be difficult for me to say that this is indeed has bottomed. But notice that it's been steadily moving higher, making higher highs and higher lows, and finally we broke out here in mid-June, and now we moved to 52-week highs. So 52-week highs are definitely a good sign, and these are all-time lows. So if indeed this is a new bull market in solar stocks, I think we could continue significantly higher. And these guys are very volatile, so we could expect a strong move higher if this is indeed a new bull market. Okay, moving on to bonds. This is junk bonds, a high yield bond fund, JNK. These are all-time highs here. This chart does include dividends. It doesn't. This is adjusted for dividends. So with dividends, these are all-time highs here on Wednesday. So stocks and junk bonds correlate very highly, and I think that this is a confirmation of a bullish posture for stocks. Here's a weekly time frame for junk bonds. Again, I don't see a topping pattern. This is still a bullish chart to me, and this fresh highs continues. yeah, eventually, the yield will become very low, and the investors will, like, say that they will demand a higher yield, so the bond prices will come under pressure. That may or may not mean the end of a stock market's, end of this current bull market, but it has not happened yet, and we could continue sideways or higher for some time in the still to come. The investment grade bonds, here's treasuries. We had this big weekly, this is a weekly chart, so we had this big weekly bearish engulfing here that was confirmed. And so far, I feel like maybe we have not yet bottomed, because like these two candles are almost perfect but not great. And now we have a red candle, so maybe we're not yet done correcting. Maybe we still need to work off some of the overbought conditions following this relatively large surge from the beginning of this year. LQD, the investment grade corporates, they did make fresh all-time high. Again, this is an adjusted chart, adjusted for dividends, so it made fresh all-time high here, but again we're pulling back. So this chart is obviously a lot stronger than TLT, but I think TLT is more important, and we'll see where this goes, but I think that TLT may need to do some more correcting before continuation higher. Okay, let's move on to Forex Universe. This is US dollar in a daily time frame. Pretty bad looking chart. Notice that even back here in February, March, I was not 100% that we have changed the trend to a downtrend. But then we had this support break here in May, and this was already not a good sign. Another support break here in June, and then we were, at this point we were around November lows, and then we continued lower, and these are actually 52-week lows. So not a good looking chart anymore. I mean, look at this. This is a multi-year highs, and we just completely moved lower afterwards. It is definitely oversold from multi-year highs to 52-week lows, pretty much in a straight line. So definitely oversold chart. Notice that this is a 52-week channel, so we're hitting 52-week lows. Now we are already in the support zone. We're at 93.11. So we're around 2015 lows here, and notice that there's a lot of lows here around 93, 92, 91. So in other words, I see quite a bit of support in this area. Now, unless of course we collapse below 2016 lows, I think the bounce is coming. And I think this will weigh on gold. If we eventually find support here, maybe we'll trade sideways. Maybe we'll continue lower, but some sort of a bounce is definitely overdue. And here's Euro, which is a major component of the US dollar index. Here's Euro breaking out above very important technical level at 1.711 here, a high from 2015. If you listen to my previous videos, I repeatedly showed these two levels to watch, and now we are breaking out above them. So I think Euro is now bullish. I mean, these are multi-year highs here. So if I was trading it, I would look for a pullback, and I would look, to buy it on a pullback. I think the pullback in Euro is coming, and vice versa, a bounce in the dollar index is coming. Most likely within the next few months, I would say. Okay, and gold here on a weekly time frame. Notice we had three just really good looking candles over the past 3 weeks. Euro, the dollar is dropping, gold is rising. Makes perfect sense. Gold and dollar move in opposite directions. Now there is resistance up here at about 1300 basically, and this is a possible double top here. So now it looks like we're approaching that possible double top. Actually, let me go to GLD. It's a little bit more obvious there. So here's that similar area that corresponds to around 1300. In fact, let me zoom out a little more so it's a little more obvious. Here is that support break in October 2016, an attempt to go higher that was stopped, collapse afterwards. Then we had basically since then we're kind of rising in waves. So we touched that area first time in April, and we touched that area again in June, and looks like we are approaching that area of resistance again. So it is very likely that resistance will be somehow felt. Maybe we'll see some selling here. If we gap above resistance, especially if we gap above 124.76, it will be an excellent sign for gold, and we will continue higher. For the record, I think gold is bullish, and I'm treating it as bullish, and we're trading it on the long side. I'm not trying to short it right now. In fact, I have GDX open myself. GDX here, as far as market breadth, I don't see any major issues. The bullish percent index is a bit on the low side, which kind of worries me. But overall, my market breadth index for gold is still in a bull phase. And I think for now, I think, this is a hopeful development here, because notice this very large candlestick here on Wednesday, and now we closed again on Friday above the 200-day moving average, and 200-day is actually very close to 50, and we might see 50 close above the 200-day moving average soon if this continues. So this is a hopeful sign, and we hopefully will continue higher from here. Weekly time frame, notice that we had a bearish kind of inside week with a bearish resolution that was immediately reversed with a bullish engulfing and a continuation higher. So for now, it's just kind of basically moving sideways, but the important levels to watch, I think, for GLD again is 123 or so, and of course for GDX, I think important level to watch would be around 2570, 2580 or so. Let me put a line there. So those two are very important levels. I think if we manage to close above 2580, I think we'll see fresh highs. And here's GDX on a daily time frame with a few of my proprietary indicators. The gold breadth index is bullish. We have a short-term indicator, which is percentage of stocks on the buy signal. Notice we had two oversold readings here back in June and again in July. Notice that this is not an infallible indicator. No such thing as an infallible indicator. So don't bother looking for it. Notice that we had a oversold condition, a bullish cross here, and notice that we made a fresh low afterwards. So that is the reason why I personally prefer wider stops. I don't like very tight stops. Again, same thing here, and now looks like we're moving higher. Another proprietary indicator here is ITBM, Intermediate Term Breadth Momentum Oscillator. I did not invent ITBM. This was invented by Charles Swanlin. You can look it up, ITBM. I use the calculation for ITBM. You can look it up yourself. But I just use the calculation for ITBM to calculate that same number for GDX because it's not available on stock charts. So I had to create my own. But in any case, the oversold levels were back in June, July, and now we're moving into, well, I guess if we're considering this market bullish, then it's not overbought. It's just normal. Okay, let's wrap up with oil and gas next. Okay, let's move on to oil. Here's West Texas Intermediate light crude oil on a daily time frame. Pretty strong move here from the June lows. Now, I treat oil currently as bearish, so I would be looking to short it. We had, couple of we had one, strong move higher here for oil, and then a failure, and then another strong move higher for oil in May, and then another failure. So I'm looking for something along the same lines. I'm looking for a failure. And then I'll short oil. Now it looks definitely overbought rather. So I will be looking to short it, and we will be looking to short it at MasterCharts Trading in the next few days to few weeks, just depending on the conditions. West Texas on a weekly time frame. So same thing. Basically, we moved higher. This was a really strong week, 8% gain for oil. I think it's overbought. I think we're ready to roll over and resume a downtrend. If we roll over, we take out, $42, especially if we take out $39, we could easily collapse completely to like mid-20s or so. XLE Energy ETF. Yeah, we closed about the 50-day moving average, but it's just so weak. Relatively speaking, it's weak. Advanced decline lines are at multi-year lows. Very weak chart. Exxonmobil, here's Exxonmobil. Big part of this sector. This is a 52-week lows. So, not a strong chart. And here's a chart I really like. I have XLE here in the upper part, the energy ETF, and West Texas in the lower part here. I showed the chart many times in the past, but just to recap, notice that energy ETF kind of leads oil. You see it kind of keeps moving lower while oil trades sideways, and then they move together lower. Again, same thing here. Oil energy ETF moves down, down, down. Oil kind of trades sideways. But now we're approaching 52-week lows for XLE. And I think if we fail here, we could easily take out the 52-week lows and continue lower. And also notice that oil moved up strongly. It was like 8% I just showed. But energy ETF XLE only moved up 2%. So if oil was going to continue higher, wouldn't the energy ETF continue higher as well? Yeah, so I think we, like for example, here is a bounce in 2016, a very strong bounce, and notice that energy XLE had stronger move higher, while oil was trying to catch up to it, sort of. So I wonder if it's same picture now. I think we're ready to resume a downtrend basically. Okay, and here's natural gas on a daily time frame. So not a great chart. It's still kind of like a corrective pattern, I guess, and also it's not a very strong chart. I would still treat it as bullish simply because it's a 52-week highs. If we look at the 52-week, or rather, if we look at weekly chart, this is a 52-week highs, deep pullback, move higher, another kind of corrective pattern. So we could still retest the February lows. If we do retest February lows and we don't hold there, this could be a head and shoulders. Like for example, this is a shoulder, head, another shoulder. If we don't hold there, we could see gas collapse to maybe even $2, $1.80 or so. Hasn't happened yet, and we could still hold here and continue higher. Alright, that's it for this week's recap. If you like this video, please do hit the like button. It's below here. It really would mean a lot to me if you hit the like button. If you have any questions or comments, please comment below. And of course, if you have any of the social media accounts like StockTweets, Facebook, or Twitter, share this video with those who might benefit from it. Well, that's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.